up, everybody? What is up? What's up? Thanks for hanging out with me. Thanks for jamming to Church of Eight Wheels. That's my intro song, my outro song. I love that. I hope everybody's doing well. Thanks for hanging out with me. A little bit late today. I do apologize. I try to really stick to schedule. But I'm doing errands. You know how that goes, folks. So let's get right to it. Bitcoin, Ethereum, and Solana, maybe some altcoin requests. I'm, of course, Big Cheds on Twitter. That's where most of you know me from. I teach professional technical analysis, Japanese candlestick theory, and classical charting. I did CMT Level 1. I've published 3 books. My 4th book is coming out this year, The Trading Journal, essentially Trading Wisdom Part 2. Check out the free version of Trading Wisdom. Check out the free version of my Cancer memoir. And my Trading Quotes book will be free this year. I'm going to go ahead and make a playlist for that. Brand new traders, and there's many of you, go to the Masterclass tutorial playlist. You really need to minimally watch that to understand what I'm trying to do, what these moving averages are. When I talk about certain techniques, a spring, an upthrust, I talk about, the importance of volume, all those things. You're really at a disadvantage if you haven't watched this playlist, and you definitely should not be trading, like risking even $1 if you haven't watched it. So go ahead and check that out. I will let you know, of course, I do a twice a week full market analysis, Bitcoin Live, every Wednesday, Sunday night. I do the whole market real in depth. And it's, when you sign up, you get access to the entire team's work. Best team in the world that studies crypto. If you're hearing me now, again, thank you. Let me know. Leave me a comment in the chat. Make sure you're subscribed so you can talk in the chat. Let me know, how you're doing. Maybe a thought or something about the market. And we'll try to use that. I'll try to use that as a teaching moment or something to create some educational value while we're here together. And my next stream will be Tuesday morning. So we'll do a quick Bitcoin. Nothing's really changed too much. I think a lot of people are over trading here in the middle of the channel and getting chopped around. Most recently, the price has essentially been disrespecting the 99.5 level, so that's not really important anymore. And we're shifting back to observing well-defined range lows and, somewhat well-defined overhead right around 107K. This is all in the context of move and consolidate in an uptrend. Weekly is super clean, super strong. Bitcoin looks really good. The rest of the market, it's different for each chart. The rest of the market is taking some damage, but Bitcoin's done really well. Ethereum broke down and, dropped from attempting to kind of hold a like a higher low right shoulder, and it knifed all the way down to 2100, which was the high time frame ascending triangle reversal. Again, it's usually a continuation, but can be a reversal. I think it's something like 23% of the time it's a reversal. Multiple throwbacks to that level, and a patient low ball bidder was able to enter there. We'll see what happens at this point. I think it really needs to reclaim 2700 and use that as some type of a momentum, building blocks. We're kind of on the wrong side of that right now. So continued weakness, Ethereum versus Bitcoin, needs some volume, needs to do a lot. It needs to have much more follow through than really not much that we're seeing here so far. Recapture some lost levels, descending supply trend, lower high break. It needs the 2-level filter. It's very far from doing that. Solana looks pretty good. 185 is your key, almost an asymmetric risk on, risk off level. Should it lose this level now, you'd be below the MA200, which is the blue line, equal weighted SMA 200. And it would be below an important level where bulls have stepped in and defended here in most recent price history or the local price history. So I have a couple tweets to talk about that I think will be interesting to create some good educational value. But let's go ahead and check in with the chat and see how everybody's doing. I'm going to need more participation from you folks. So ask a question, leave a comment in the chat, give me something to work with. Ask me about a chart or ask me about like a trading technique or something. So please, give me a little bit more here in the chat room, something to work with. Matt says, appreciate you responding to my Adam and Eve comment. You got it. No problem. Anytime anyone asks me, I think they said, is this an Adam and Eve? And I always ask people, well, how are you defining your trigger level? Because even if Adam and Eve basically means a V and then a U, a sharp reversal. It could be other way. So we'll flip it upside down. So it could be like this, or it'd be like a bottom and then a rounding bottom. The question is always going to be, where's your peak? Not these lows, the troughs are really not important. Any pattern, it's about the trigger level. That's what I asked Matt. I said, well, where's your peak? And so I want to make sure people are thinking about it, like not just naming a pattern, but understanding that it's going to have to trigger somewhere, and it's going to be at the, identifying the key breakout level or breakdown level. Matt said, Cheds, we saw BlackRock loading after ETF launch. ETFs launched in June. Do you think we could be following the same playbook with in Trump loaning Ethereum? Just a thought. I mean, I don't know, but like if that maybe, but what value do we get in really kind of thinking about that stuff? Because we just need Ethereum to hold 2,700, okay, to start, and then it's going to have to flip back over 3K loss support. And it's going to have some work to do. I don't really care about that speculation. I feel like it really, it dulls your senses. It puts you at a disadvantage if you spend a lot of time thinking about that and thinking about stuff outside the chart that may affect the price. You have no control over it. And it's a natural human instinct to want to feel like you have control over it. Just play the levels on the chart, and you're going to be much better off. So Amar says, it's a great question. Amar says, the longer Bitcoin consolidates in this range, I mean, is it a good thing or a bad thing for the price? It's a very good thing. The longer you consolidate, the better. The more, I mean, there's a sweet spot, for sure. But, if we continued here, MA50 caught up on the weekly, even MA200 caught up a little bit, but really maybe like it just continues. People would hate this, but, chop around for a while in this range. MA50 catches up, you have a ton of room to run. You start to create a hidden bullish divergence where you'd have lower lows in the RSI, essentially oscillators, indicators cooling off and allowing for a much greater next leg up. I don't know if it's for sure going to break out or continue, but it probably will. That's your best guess. Your best guess is that this is going to continue to go up. How do I know that? It's an uptrend. It's price respecting support in an uptrend. It's not even at the MA20 in the weekly. I mean, that's how strong this trend is. So your best bet is it's going to continue to go up. And yes, that's a great question. The longer it stays in this range. So I have a couple tweets to go over that are educational, and I'm going to do that. And then we'll get back to the chat room. Hope everybody's having a pretty good Saturday. So this was so there's a lot of even big accounts who do excellent work still make mistakes with TA, like CBS here, right? So here, starting to produce a 12-hour bull divergence. Well, there's a couple issues here with it. If you look at it, we're drawing from candle wick. You can't do that, right? And we're not even using the most recent candle. It's not even grabbing the peak, the close rather, of this green candle. You can't, it's already bounced off of that. So really what you should be doing is drawing a line almost straight across, almost flat with this horizontal line from this close to this close. So remember, oscillators, whether it be the RSI or the MACD as they were using, all these things calculate, pardon me, all these things calculate when the candle closes, right? So like an OBV, for example, say you have a very, like a doji or a small body, it's going to flash from, the candle flashes from red to green. This last one, so say this was if it gets up here and is very close, this last little bit hasn't happened yet. So it might go like that, or it could close like that. If it's green, it's going to close like that, right? So oscillators calculate on the close of the candle body. So if you're going to draw divergence, you don't want to do this. You do not want to be drawing wick to wick and then not even including the most recent price action. There is a mild divergence here because you actually have flat lows versus a rising price. But you don't have the lower lows anymore. It's already started to resolve because look where the price is and look where the price is closing. Okay, this candle hasn't closed yet, but you're more or less, it's a very mild divergence and it's just not done right. You can't do wick to wick because again, oscillators are calculating on the candle body close. This is really, really important. So be very careful with your own analysis. That's something you want to be careful not to do, okay? What is the next tweet I have? And there's another like a good solid account just making mistakes, right? So a lot of crypto is a hammer candlestick from the past week, bounced off crash lows. That isn't necessarily, there's a couple things here, right? That isn't necessarily a bullish pattern. First of all, it's not a pattern, right? Okay, first of all, candlesticks are not pattern. A single candlestick, especially a hammer candle, after a move down, we'll take an example here. This is a good example of a hammer. Is it pretty good? Could be better because it's in the middle. You'd want it like at the lower Bollinger. But this is a hammer candle or even a doji if you want because it's a very small body. But it's a single candle. So a hammer candle is a single candle. And all of Japanese candlestick theory is short term. There are no long-term Japanese candlestick signals. Evening star, evening doji star, whatever you want to come up with. All the esoteric names, dumpling top, fry pan bottom. You know, a long leg doji. It doesn't matter how great the volume is on it. Everything with candlesticks are short-term signals. You know, oftentimes maybe just leading to a reversion back to like an EMA 8 or maybe an MA 20 at best in many situations, right? So all Japanese candlestick signals are short-term signals. So number one, it's not a pattern. This is a bullish pattern. Number two, they're all short-term. Number three, here's probably the biggest mistake in this tweet. Okay, 2028 was a great example where the market bounced before the collapse. This is actually a very bad example because here is first of all, it's not even a hammer. It's a dragonfly doji, but it's within a sideways environment. This is a muted signal or a non-signal. I talk about this. You can read Steve Nissen's Japanese Candlestick book, which I actually recommended here. It's a wonderful read, okay? You want a hammer candle, and again, this is all in the Masterclass tutorial playlist. And again, most people are doing this wrong. Okay, so learn for yourself. That's why I tweet out all the time, like, trust no one. You see people doing divergence with candle wicks and trying to do, a hammer candle after sideways. You want to move down into a pin bar or a candle or a hammer or a dragonfly doji. Sideways, 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 and then a hammer is a muted or a non-signal. So this is like a terrible example. Here's a great example. It's a terrible example. That's not how to use Japanese candlestick theory. Okay, every candlestick signal is based on two things, very important things. Number one, the volume behind it. Okay, the strength of every candlestick signal is based on the volume behind it. So when you see people talking about candlesticks with no volume, they're doing it wrong. You should let them know or point them to a textbook because a hammer on weak volume is not really a meaningful signal. Why does volume matter? Well, you have a move down into volume, and this long lower shadow shows that there was a momentum battle. Okay, there was already a trend where there were too many sellers. It met support. Bulls stepped in. They challenged the force, and the volume, the strong volume, is more suggestive of continuing with the candle here. Okay, you must use volume. Number two, it's context. A hammer candle after sideways, there's nothing there. It's just like a moving average cross in a sideways environment doesn't mean anything. You need a trend to reverse, right, with a moving average cross. Hammer candle, if you're trying to reverse and move down, you need to move down first. Like this, you can't use that. That's not how it works. This is the wrong way to do it. It's a bad example. First of all, it's not a hammer, and it's after sideways, right? The hammer, it's true in crypto. So let's look at the difference. Let's look at their example. Okay. Let's look at like XRP had a really nice hammer candle. Okay. Let's go to daily chart. Okay. And the hammer candle here came after a move down. After these three red candles, even a big red body, boom, nice long, and a lower Bollinger dip, beautiful, perfect. So it's just a completely different context. So these are nuanced things. Most people do it wrong. Most people use RSI wrong. Most people draw divergence wrong. Most people don't use candlesticks correctly. Again, I've laid this all out for you, right? I'm trying to take professional TA and make it simpler and easier to digest, okay? So that was my riff. We're at 15 minutes. Let's check in with the chat and see how everybody is doing. Peter says, good to see you live. What's up, Peter? You too, brother. Nice to see you, my friend. I have a technical question. How do I treat a rejection wick candle that still closes above? How do I treat a rejection wick candle? Dan, well, what's the example? It really depends. I mean, if I'm playing the wick, I'm looking for something like an upthrust. And sure, you had one here, like on Bitcoin, even though it's still grinding higher. But here's if I'm going to play the candle, I'm waiting for a wick, like an upthrust type of thing. I'm trying to understand the question. I'm really trying to understand that still closes as a higher high. Yeah, that's the thing, right? Because candle body close with a higher high actually shows that more of the gains were built in. You have to look at more things. The volume in the candle, you want to look at the body to wick ratio. Like if if a really, really long upper wick, like extremely long, and it still closes above, I'd still be concerned because the size of that wick indicates an attempted bounce and a momentum rejection, right? Aaron, Bitcoin Live member here. Thank you. Great to have you. Great to have everybody Bitcoin Live and not. My question is, Bitcoin heads to 78K. Why 78K? What is 78K? Why? I think if Bitcoin loses, and you've heard me, I don't think 78K is holding. That's if we lose 90K, we're going to probably 74. That's like a high confidence call. And then probably 72, but 74. 78K. I just don't, there's just no way it's going to hold 85 or 78K. The importance of this level cannot be understated. You have classical charting, multiple interactions. You have time interval between interaction. You have price distance, peak to trough. It's all in the context of an uptrend, and losing this level would be a severe momentum blow. There's going to be no pausing between here and like 72, 74K. So don't think about 78K. And I've talked about this like last month in Bitcoin Live. What do I anticipate happening to alts such as XRP and ADA? You just play those charts individually. Play XRP, and you know this. I've talked about it, right? Play XRP based on XRP's levels. Play ADA based on ADA's levels, right? If I'm playing ADA, I'm not playing it based on what Bitcoin's doing. That being said, this would be one of those moments where I might contradict myself because the significance of this range breakdown would be pretty big that you might want to be risking off for a little bit and see how the market settles, because you're likely to see volatility after that. So I just said two things that contradicted. So almost all the time you pretty much, and it's still, but if I had to choose one of those, I'd say I'm just going to play XRP based on the chart XRP, not what Bitcoin's doing, right? Same with ADA, same with anything else. You have to trade in the four corners of the chart because you have concept of relative strength and relative weakness, where things will be outperforming Bitcoin or they'll be outperforming other altcoins. Suckhawks, can you put a link of that song you use? It's part of the free creator library on YouTube. So like if you have a YouTube account, you can probably just access it right now under like their YouTube studio, and then like creator studio. It's called Church of 8 Wheels. Okay. You don't have to download it, and I think the YouTube versions are different. This is just YouTube like videos of it. Just check the Creator Studio if you're looking for that song. Okay, how do I measure volume? That's an interesting question. It's just here. TradingView does it for me. How I interpret volume is nuanced. There's many things about that. I have my tweet. If you look at on Twitter under volume basics, you can see like from Big Cheds volume basics, right? Okay, so volume basics, right? There's some things that you want to keep in mind, right? The most volume comes at the top and the bottom of the chart. You don't need, a lot of times, like Bitcoin will be rising and people will say, oh, there's no volume. Well, you don't need volume because the price is already trending. But you do want to look out for counter trend volume, like red versus green. And this is from Trading Wisdom, and I talk about this in my Trading Quotes book. I talk about this a lot in the upcoming Trading Journal book. So volume is measured by TradingView, but I'm also looking at relative volume. Like this is the largest volume, in this candle series or recently. And so that makes this an important candle, right? So again, back to I'm blending classical charting and Japanese candlestick theory, the two methods I've studied professionally that I teach, I trade with. And so volume is important. There's a lot of nuance. You want to look for it. It helps in a breakout to confirm the break. You don't need it necessarily. It just, again, there's a lot to it. If you're asking me about that, you're going to want to go to the Masterclass and watch it. And there's three of them, three beginners. Again, you should not be trading until you've watched those Masterclasses. How would you hedge a position? I would, that's an interesting question. How would I hedge a position? So here's what I might do. Let's say, that's a very interesting question. Let's say the whole market, all of altcoins started to bounce right now. And I did this. I tweeted out a short on DOT, and I tweeted out a short on Ethereum at 3,400. And I know some of you took that and did quite well. But I tweeted out a short on DOT right here at right about 750, 780. And this was a moment, this is a great example of a hedge. I even discussed this with Nebraskan Gooner at the time, who's a good dude. The whole market was kind of bouncing, but I targeted DOT as a short while I was still taking other longs because it was a bounce in a downtrend, right? It's an underperformer. DOT had been an underperformer with a very clearly defined, what's called a pullback or a bounce into loss support. So one way to hedge might be to, like I said, if all the alts started to bounce right now, I look for like one of the weaker alts or one that's been weaker. And when that starts to bounce, maybe short one of the weaker alts while still longing, something with relative strength. So that would be certainly one way to hedge. I'll look at Stellar Lumen. I haven't looked at this one yet. You want to see it hold here right at 33 cents. It's still a decent chart. It's still an uptrend. It still looks pretty good compared to much of the rest of the market. I think if you start to drop below 31, 32, you maybe kind of wondering why it didn't hold there. It should hold there. So I would be watching this level. This is an important level for XLM. Great room today. Great chat. I'm glad you folks are here. Cliff says, do you hold anything for a long time, like set and forget it for years? Yeah, Bitcoin. Right? And I have some Ethereum that I'm holding too from way lower. But I'm not going to hold anything other than those two. Like, these are all nonsense. I have zero respect for altcoins as like things, as like when projects. Like, for me, the word project is funny. Like, I don't even believe in it. Like, I think if you look at like, I've got a whole bunch of tweets in this for sure, where I say certain things like project, right? Where I'm like, don't ever allow yourself to believe in a company or a project, right? Because the minute you start believing it, like, you kind of you say, oh, well, it's okay to ignore this chart, right? So for example, like, say I really like Stellar Lumen. I think that they're going to sign with Microsoft, or they're going to sign with whatever, LeBron James. I don't know, right? There's some reason you convince yourself that there's like some secret value that the rest of the market just doesn't get. They don't get how great Stellar Lumens is, right? For example, right? When you get to that point, whether you realize it or not, whether it's conscious or subconscious, you might ignore a support breakdown, right? Because you're saying, oh, it's gonna bounce because it's so good. It's like you know how like with how like every parent thinks their kids should be a model, or every parent thinks their kid is a genius, or thinks like whatever, right? Because it's your favoritism. So you build in a favoritism. I don't like the word project. I think you're messing yourself up. These are vehicles for speculation, period. Okay? That's it. And does it have a community? AKA, is there liquidity? Okay? That's what's important. Is there volatility? Good. There's action. Good. I can trade it. Is it an uptrend? Is it a nice uptrend? Good. Can I play it can I play it and buy dips in the uptrend, right? Like, great. Like, that's what I'm going to try to do, right? I'm just going to play stronger charts and target dips and uptrends, right? It can be a bumpy road, sure. But I'm not going to think of these as like things, as real things. I would never hold. And that's the problem. And how could I hold these things? Because they're breaking down. Like BNB, maybe you could hold, because it's kind of an overall barometer for the market. It's a Binance coin. It also happens to be an impressive high time frame chart. So yeah, like, this is one you could have been holding, but you can't hold things that have lost support where your original thesis has failed, right? Because every time, Cliff, great question. Every time you put money into play, it has to be based on an articulable thesis. I'm in because the price broke out of support, and if it essentially loses that, then your idea's failed. So you don't just buy stuff because I like it or someone said it was good. You buy based on something to do with the chart. Because the market's telling you stuff. The market filters out all that other stuff outside of the chart. It tells you if it means anything, because the price will go up or go down. If your thesis fails, you got to get out. So there are very few things you could have even been holding for years anyway. So number one, I would never hold anything really other than Bitcoin and Ethereum, because I have zero respect for altcoins as projects, as real things. It's all just it's just hot potato, folks. Musical chairs. I've been doing this for a long time. I traded penny stocks for a long time. It's the same deal. These are not real things. And the minute you start to believe in it, okay, the minute you start to believe in a company or a project is the minute you stop managing your risk, and you stop respecting support breakdowns, right? You got to protect your money. Okay. Great group today. Great questions. So, I mean, Andre says, how would you identify the end of a downtrend? Yeah, it's a great question. And by the way, this is in my Masterclass tutorial. I have a new one I'll be filming this year. That takes me quite a while to prepare. But, there's a bunch of ways to do it. So, for example, we can talk about how did I identify the end of Bitcoin's downtrend? And how did I get long at 18.5 and announce it on Twitter, and a bunch of people get along at 18.5? Well, I've been tracking it all the way since the top. And around, again, as you know, this is I'm not breaking news. Around 40K, I basically said, hey, we're going to like 15. We're going to like 12 to 15K. And we did. Once we started to get below 20, I started looking for a bottom. It wasn't there. I noticed a sentiment bottom at 15.5. Now, not everyone can do that. You don't need to do that. But I noticed there had been a sentiment bottom. And I just have a feel for this because I've been doing it, every day now on Twitter with Bitcoin, especially since 2017, almost 8 years actually, which is kind of funny. But I noticed a sentiment bottom would maybe look even closer. And then I saw a price bottom, and I saw a recapture of lost support. Very simple way to go long. You have a support level when the price attempted to bounce, and after this candle, you're now on watch, okay? After this candle on Monday, the 22nd here in the daily chart, you're on watch, right? And I'm going to go over this actually in my next masterclass, that whole walk from 12 to 100K. Metaphorically 12, because we only went to 15.5. When this attempted to bounce and was rejected, this is now telling you, price is telling you, watch this level. That's an important level. So here's where I announced long on Twitter. I basically said if you're sidelined, I said long triggers in the break at 18.5, right? And pretty much most people got long. What you had here was you also had the beginning of a second level filter. So you have, generally speaking, a descending supply trend here. It doesn't matter how you draw this line. It doesn't matter body or wick. Unlike the divergence, this isn't a price you're looking at. You're looking at a trend. You had a descending supply trend break, and you had a pretty aggressive, but it worked out lower high break. So you're looking for is what's called a second level filter, right? So a lot of people, what happens is they have a downtrend that's doing this, okay? As soon as this breaks, they get long, and then all of a sudden the problem is now they're riding the other side of the downtrend line, right? So when you do that, you want to actually wait for a lower high break. It's called the second level filter. This is one of the trade setups in my trading journal book. I go over and talk about how to set it up, how to look for it, when it invalidates. I'll do one last question. Jimmy says, when you look at a chart, and by the way, folks, it's just me. There's no moderator. There's a great chat room, 200 of you, tons of questions. I can't answer them all. But I'll read after the video. I do that. So I will see your comments, and thank you for that. And make sure you're subbed. When you look at a chart and you make a quick assessment of whether it's a good chart or bad chart, how are you doing that? Very simply, and it's muscle memory, but it's just the blue line. Is it price above a rising MA200? It's an uptrend. Again, this is in the masterclass. I really lay this all out for you. Price above a rising 200 is an uptrend, right? And then I look at where the price is in relation to prior structure. And I'm like, damn, this is pardon me for the, some people, I have to swear to some people, but I look where the price is in relation to the prior highs. I'm like, oh, it's above prior highs. It's holding broken resistance. And I see all that in like a split second based on any chart. So I basically look at where the price is in relation to the 200. Then I look at the price in relation to recent structure. This is part of the Quick Market Update series on YouTube. I teach professional TA, classical charting, Japanese candlestick theory. Almost everything I do is free, and I want to really put it out there for you. I love the feedback. I published 3 books. I have my 4th book coming out this year, Trading Journal. I will be making a free version of Trading Quotes book. Check out the free version of Trading Wisdom. Check out the entire free version of My Battles with Cancer. By the way, these are all on Amazon and Audible. I've recorded the audiobooks for all of those. Watch the Masterclass tutorial series. I've got some interviews coming up this year. I am, of course, a big Cheds on Twitter. That's where most of you know me from. And at Bitcoin Live, I'm a founding analyst. And for more than 6 years, I've recorded a full market report. I look at the whole market. I answer everyone's questions twice a week, Wednesday, Sunday night. I haven't missed a report in 6 years. I've been sick. I've been on vacation. I've been on cruise ships. I find a way to do a report. And when you sign up, check out the entire team's work. I love our team. best team in the world that studies crypto. And I love you folks. I love this chat room. I love that you folks decided to spend a little time here with me. You have great questions. I tried my best to answer many of them. There are many more I didn't answer. And I'm sorry, but I'll get to you maybe next time. So make sure you show up, hit notifications. My next stream will be Tuesday, Tuesday late morning Eastern, like 11 o'clock. So keep an eye out for that. And be kind to yourself, be kind to others, and I hope you have a good night, good morning, wherever you are when you hear this. And I will talk to you soon. Big Cheds out. Peace out, everybody. Be well.